Hello everyone, this is Riya Singh, the Senior Research Analyst for Nirmal Bank. So let's look at what has happened into the currency market. Now the major headline is that US Fed is scheduled for its FOMC meet on 27 July. So the expectation is that there will be a 75 bips rate hike rather than a 100 bips rate hike, because it will be then too aggressive stand. Well, if you look at the US economy numbers, so obviously if you the numbers that have come out is already showing that US is in a contraction phase, and US GDP numbers for second quarters is scheduled for this week as well, where the expectation is that numbers will again come on the negative side, thus citing the second contraction into the US economy. Now I think after why the 75 bips will happen, because if you look at the numbers, they are quite on the negative side, which is showing that the US economy is slowing down right now. For example, if you look at the housing sectors, now the numbers on the housing sector is cooling off, because if you look at the new and pending home sales data, they are indicating quite sharp decline. If you look at the consumer confidence data, that is also witnessing some steep decline, where it went from 98.7 to 95. And apart from that, the major important numbers such as ISM numbers and purchase manager index numbers, both are showing a decline. So all this is indicating that the US economy is on the contraction hold, and thus the GDP numbers that is due for this coming week will be on the negative side as well. Now the major two factors that the Fed has taken into consideration for the rate hike is the employment numbers and the inflation numbers. Now talking about the on the employment numbers, so even on that side some crunch could be seen, because there are already talks of laying off. Laying off is happening into the tech companies, as well as if you look at the US unemployment claims that have started to edge up. So that is the first red flag that you can that could Fed could take into consideration for going soften on the hawkish stand. Second thing is inflation numbers. Now of course inflation numbers have again given an upside surprise, going to 9.1%, which is quite far from the target that they have set of 2%. Now I think taking into consideration the fall in the commodity prices, the peak might have reached into the inflation for the US economy. But whether it will plateau going forward or decline at an aggressive stand like it rose is a big question, because the commodity prices that have not fallen because there is a balance between supply and demand, but because there is a demand crunch that is coming in. So this is one of the reasons why the commodity prices have fallen, because of the crunch on the demand side and the recession fears. So overall, if you look at the core inflation numbers, that will show that the pressure is still there. The gasoline prices though have fallen, there is still demand or the inflation that could rise from the electricity side. Now US, UK all are experiencing extreme heat situation, thus electricity bill could heighten. So overall utility bills will be high. The food inflation still persists, and natural gas is again on the rise. So overall I think core inflation will remain sticky, but the headline inflation might take a break here and plateau. The fall into the inflation will not be so aggressive at it as compared to the quite quantum that it rose. So it will be a slow fall into the inflation for the US economy. Now overall, what will be the outlook for the Fed? I think if you talk about the rate hike, which already stated, it will be a 75 bips rate hike, and I think going forward Fed will again commit with its 2% inflation numbers, and it will again it will acknowledge that the US economy is on the slowdown, because taking into consideration the negative numbers and the US GDP numbers that is expected to be on the contraction side, I think it will be very important for the Fed to acknowledge that the slowdown has commenced into the US economy. For the September meet, I think they'll go for guidelines towards 50 bips rather than the 75 bips, because with the negative US numbers, soften on the hawkish stand is somewhat expected. Why not 25 bips? Because of course, like I said, inflation is a major concern and core inflation will remain sticky. So I'm not factoring in a 25 bips rate hike, but I think first 75 bips and followed by 50 bips. So the range for the Fed policy rate will be anywhere between 2.25 to 2.5% going forward. Now what will it how will it translate into the dollar index? I think dollar index will remain on the stronger hold. 105 to 103 is the support that you can see on the dollar index. The second thing is the maximum upside that you can see is 108, 109. I think it will max out on that front. So it will remain on the stronger hold. I'm not expecting any aggressive downside on the dollar index. For the Indian rupee, I think the two things that is playing is, of course, on the positive side, if you look out, the FPI inflows have marginally become positive. So the FIIs have been selling off into the Indian economy since September 2021, and in the month of July they have become marginally positive, which is one of the good signs for the Indian rupee. There are some inflows that is expected from the SBI and Yes Bank that could aid into the stabilization of the Indian rupee, and of course the work that is done by the RBI and the government in order to control the aggressive volatility depreciation on the Indian rupee. So these are few of the few positive points. Now what will be the points that will mitigate this is dollar index remaining on the high side. If Fed doesn't turn from its hawkish stand, the widening of current account deficit and trade account deficit, as well as forex reserves falling. So these are few points that will mitigate the positive side of the Indian rupee. So overall, I think taking into consideration the current online factors and the work that is done by the RBI of not letting it to depreciate very aggressively, a small correction that will come, or the appreciation that will come towards 79.60 levels, and then I think the Indian rupee will resume its depreciating leg towards 80.50 and 81 levels. So first I think it will come towards 79.60. It is something that we are forecasting for a short term, and then it will resume the depreciative tone. So that's on the currency front from our side. Thank you for watching.